Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn Associates. I'm a bit late today. We're after 4:35 p.m. Central Daylight Time, but I wanted you to see where the markets finished off. It was a wild day. I was on Fox Business News, and they're trying to figure out reasons properly. Why is this market doing it? And my answer was, you're at the end of the year. You don't need a reason, and you're going to move all over the board in wild fashion because the trade is thinning out. The algorithms are pushing on the market as though volume is normal. It's not. It's a different type of market when you get right in front of Christmas and right in front of the first of the year, and traders are leaving, and that's my point. But as we look at the market, we don't have a budget yet. As of this minute, at least with me doing this, the president has refused so far to sign anything that doesn't include money for that wall, or as he's going to call it, slats of steel. I don't know what he's got new terms. You can see that the dollar down sharply today, and it picked up the metal markets, and it picked up other markets too, but we'll talk about that in a minute. You've now gone from 29.34 on a closing basis down to 24.85. It's rather dramatic in its scope and size from the speed of an October break, while the economy in the fundamentals people think hasn't really changed all that much. Watch financial TV. You'll see that they keep saying, well, the economy's good, employment's good. Well, everything is good except the market's repricing, price earnings and the like, looking forward. And that's the function of a market, to look forward and see if something different's happening. Now, the good news is you're going to be down so much in the market, probably going into the first quarter earnings, that no matter how those earnings come out, they might give the market a boost. It could be a surprise to people because this is just one big swoop. Look at how you're just down dramatically there. The swing lines are still with the pattern of lower highs, lower lows. Now yesterday's high becomes even more important. It's confirmed that that is now the swing line. As you can see, to get back to resistance at the 18-day average, you have to break this pattern, getting through 25.92 roughly, which would break the pattern of lower highs and lower lows. When I look at where the Bollinger Bands are, yes, you stick your neck out, but you climb right back into them, and that's what the market's been doing time in and time out. Today being not really much of an exception. You close 2486.20 and 2481.50 is the low of the Bollinger Band. So you're riding that band down as you're taking the momentum and embedding it. So you're switching the market over right now. In fact, you've done it, where both numbers, as you can see, that make up the stochastic are staying under 20 several days in a row. Today was the third day. When you lose this reading, the odds favor, not that it has to happen, but the odds shift dramatically to the market and the 18-day average making a run at each other. That is the theory that I have when you lose an embedded reading. So right now, who's in control? The bears. On rallies, they'll keep selling until, in my opinion at least, you lose that embedded reading. The NASDAQ is just oversold. It is not an embedded reading. It's not several days in a row under. If you look, you went to the lower Bollinger Band and you came back closed over it. All you're doing is respecting that support line. That's it. Doesn't mean the market's suddenly going to turn bullish or anything like that. But each time you're getting to those numbers, that's where I think the pros are stepping in and covering. In the Dow, you finished out at 22,997, just under the 23,033 level. Now, if we come to yesterday, the market closed at 313, and 23,327 was the number. So 2 days in a row, you're very oversold, not embedded yet in the Dow. And the Russell's been this way. And I think I've been clear as can be here. It's riding that band down. It's the weakest of the markets. It might be the first to turn. Why? The weakest generally is the one that first turns. But turning will be in the slow stochastic. Not that you throw a dart here and you say, I'm going to buy the market because it's cheap. I don't know what the word cheap means. How's that? I don't know what the word expensive means either. When I look at the VIX, you're making new highs on this whole move. So the fear index, and that's what this is moving up. I do think the pros sold into it, and they could be caught here. I mean, there's a number at which you say, I'm in trouble, and I wonder if that's not it. Somewhere you're going to get a blow-off day. Haven't had it yet. Capitulations, another word you'll read in the news. You've got a lower low, higher high. This is how you pay attention to resistance of upper Bollinger Bands. You back away from it. You did the same thing in the 10-year note. You're overbought. I'd just be watching and see what happens there. TLT has this embedded reading. Now, when the when the red line, I said that wrong, when the red line gets under 80 on a close, I'm going to look for price and the 18-day average to make a run at each other. We'll see when that happens and if it happens. In the dollar index, you were down 70 points today. I mean, that's a big break. First time we've closed back under the lower Bollinger Band in a very, very long time. I have told you I'm beginning to think that this is a major top in the dollar, major top, not one that's going to be easily taken out. I'm clearly wrong if you go back through this week's high, but until that happens, I suspect this market could even work to the 100-day average. It's oversold. You know what I teach? I do not teach you go short under a Bollinger Band, that's for sure. I teach you that you don't do that. Doesn't mean you can't collapse out of here, but that's where I think the pros are taking money off the table. In the euro, the market's through the upper Bollinger Band. Is this going to become a base for the market? That's something to be thinking about. In the British pound, look at the battleground. It's the 18-day average of closes. It's been that way. The Bank of England sat still, as you know, on their rate policy. Nobody knows what to do about Brexit. It's every day you wake up, a new event there. Very difficult to trade for people. In the Japanese yen, this is repatriation of money. Japanese investments elsewhere are all being brought in. It's a safe haven area. People are running. They're not running because of high interest rates. You don't have them in Japan. They're not running there for their stock market. It's okay. Don't get me wrong. Ours is the one under the most pressure. They're running because people want their money safe. And that's what you get these vertical moves on. And when you come out of them, you come out of them. Right now, we have a day over the upper Bollinger Band. That was the first day. All these others, you did not do that. So it's the first time over. You're overbought, not embedding. You're also sliced through the 100-day average, which normally you don't go through it that easy on the first challenge. So I think you've got, in the currency markets, capitulation taking place. Bitcoin, as I said, I wouldn't be surprised if we made a run to the upper Bollinger Band. You're not overbought. The trend is up. The bias is up. Could be more short covering. Every time you get short covering in that, the bulls come out and go, this is the bottom. In Brent versus WTI, look at how energy prices are just collapsing, even the differential. You're trying to break out to the downside of what had been this sideways action, and the market's doing an effective job of it going into year end. The problem is, other than short covering, who's going to step in and just start putting out big numbers in these markets at this time of year? That becomes a serious issue. And in nat gas, you talk about getting whipsawed. You have an outside day to the upside. I believe, no, it was downside yesterday. Today you take out that high and you close near the day's low. Normally I'd call that a trap for the bears, and you'd have to get through this low to tell me it's not. But you're getting an embedded reading. It's too hard of a chart. Why try to catch anything? I want to remind you, I'm going to be going away shortly for the Christmas week. Yes, there'll be some updates out for you out on here. I'm going to teach you a little bit about moving averages, swing lines, and the like. And this is all part of my holiday course, by the way. And it's a holiday special. This course had been $149.95. I've dropped the price for Christmas to $99.95. You can buy it as a gift for somebody. For yourself, it's a great gift. You're going to learn. That's what I try to do. I try to teach you an idea that I have, and then what you want to do with it, you're going to take it in that direction that you want. But you can either go to our website and read about the course under the word education. You can call my staff, they'll help you, or you can click here, it'll take you to our webpage and you work with it that way. I'm Ira Epstein. You have a good day. See you tomorrow.